Hey guys, it's Jesse Klein here and Justin Klein with the Klein Real Estate team. And we're about to give you your April market update. It's a real shocker. Prices are up $150,000 to $200,000 on detached houses from the market low, which was kind of like October to December. Total surprise for even the most bullish realtors who thought that with interest rates at 5%, there is no way sales volumes would recover and prices would start moving up. It's just unreal. And really, this started off as a supply phenomenon. New listings were running like 40% below the long-term average all of last fall and then into January, February, March. So there's just nothing on the market. And it kind of turned also into a growing sales demand as well. And we've actually seen buyers step up to the plate, high income earners, people with lots of money, downsizers that have a lot of equity in their home. And it's just so rare as well for inventory to be this low. You'll see on this graph here that inventory has not budged since January. And this never happens. If you see every single year, there's a pattern where inventory does this. Grows in the spring, starts coming down in the summer again. And this year, it has just stayed completely flat. Anything new that comes to the market gets bought, and it's just pinching things.
So to give you a good idea of where the market is at, we listed a starter detached home in Surrey last month for $1.2 million. Now, we based the price on recent sales over the last few months. However, knowing the market had picked up, we set an offer date for a week after first hitting the market. This way, everybody has a chance to view the property, and then hopefully we get some offers over asking. And we ended up getting 50 showings and 16 offers. The highest offer was subject free and $1.357 million, $157,000 over asking, and higher than any other recent sale.
Immigration is one of the major demand drivers for the market right now, and we're expected to have another 1.45 million immigrants by 2025. And BCRAA just released a report predicting that this will increase prices by an additional 15% by 2025. Compared to if we didn't immigrate all these extra people and just stayed in line with the historical norms. So the government of Canada is literally importing increased real estate prices. That's what's going on here. We can't keep up with our supply. The government, they tax housing like it's cigarettes. And if you want to build a new home, you're going to pay like 25% of the value just in taxes in a lot of places. It's just ludicrous, and zoning restricts things, and we don't have enough trades, and it's just a gong show. We can't build housing enough for these new people, and we certainly can't do it fast enough. So this is going to have a effect on prices, and you can watch out for that over the next 5 years. It's probably one of the most bullish things for Canadian real estate right now. Even with rates this high, it seems like we just can't keep up.
So you might have heard of the new BC province-wide changes that are coming, and these are huge. BCs will be implementing legislation to try and keep up with this immigration demand. Now, much of the legislation will be released in the fall of this year or maybe early of next year, but some of the most important components are: one, mass upzoning of single-family lots. Many areas are going to allow up to 4 units, and likely this is going to increase land value, so we'll be keeping an eye out for opportunities there. The second one is a $40,000 forgivable loan for converting a portion of your home into a rental suite. And then the last one is requiring municipalities to fast-track permitting. This is really impressive. If you watch one of our recent videos, we talked about what the government has to do, and then a few days later they came out with all these initiatives, and it's pretty awesome to see that they're actually taking some steps forward here.
Mortgage rates are on a total yo-yo, kind of bouncing between 4.7 to 5.6%, and it's just kind of doing this. 1 month it's here, next month it's here, then it's here. If you go and buy a house right now, you could so easily lock in at something at like a 2-year fix, like 5.7, and then next week all of a sudden it's at 4.8. Like it's all over the place. So keep a really close eye on that if you're thinking about buying right now, and you can try and time it where at least you can knock 1% off. The irony of this cycle is that economic growth continues to slow, and a lot of people are predicting a recession later this year, but housing seems to have already rebounded. Housing is on the front line of any rate hikes. So when they started hiking rates last spring, immediately housing responded, sales dropped, and we saw prices start to fall right away significantly. By July, most of the price declines had already been baked in, and prices really haven't moved since July. Detached is already above July prices. It's recovered. Beyond that, not obviously back to the highs, but somewhere in between. And so, same thing with when rates start to fall again, or at least pause, housing's on the front line of that. And it starts to recover quicker than the broader economy would. Now, if we do hit a true recession, people start losing their jobs and growth starts slowing. Okay, that could really start to affect the real estate market again as well. But if this is a soft landing, housing might already have been through the trough and coming out the other side. So it'll be something to watch over the next 12 months.
So moving on to opportunities, the biggest opportunity we see right now is there's pretty much zero detached house inventory under 1.5 million. We're starting to see a few more come on, but if you want to sell your house right now, it's literally going to take only about a week and you'll have a pile of offers to go through and likely a subject-free one. So if you're interested in that opportunity, feel free to reach out or send us an email. We're always happy to chat about that.